Good morning, traders. It is Monday, June 24th. Taking a look at the charts, we've got the 30-minute regular trading hours trend analysis chart. The bars more or less signify the trend that the market is in. Red obviously being down, orange being neutral to trend reversal, and then green obviously an uptrend. And then we've got these hashtags that adjust as the market moves, and it tells us when the market is getting a little bit overbought to one side. You can see the market's been on this tear to the upside, and it's flirting with this overbought territory. We're also on the daily chart flirting with these previous highs. We did poke to some new highs last week and quickly pull back, and the market's pushing up again today, testing these levels. We are holding the 5-day moving average, which is this baby blue line here, and that means we're in a high momentum move. So the SP 500 could very much so continue to kind of spike and have a little blow off top this week. But I do feel as though it is getting a little bit overbought, and we are going to see some type of pullback. The market loves to make nominal new highs, meaning we poked to a nominal new high right here last week. Maybe we'll have a couple more wild intraday bars here as it kind of spikes up. But I do feel as though we're going to have some type of pullback in the market. But the way Fibonacci works is the market is always searching for a new high or a new low depending on the trend it's in, and we got that new high, and we'll see how things unfold this week if equities put in a little bit of a top, and see where the safe haven money flows, if it goes into precious metals, into miners, or if everything has a little bit of a pause or pullback, because last week we saw stocks and the safe havens all run up together. Now, if you take a look over at, let's pull up the dollar real quick. Here's the dollar index chart. You can see here more or less, get rid of that ad. Here's the dollar index. We've been kind of running up this support trend line through here, breaking down more or less the last Friday. Today moving lower again, trading a little bit lower, down 0.17%. Obviously, a break of this level, I think we're seeing money start to unwind a bit here. There will be potentially a little bit more downside move, but more or less, I think it's getting pretty close to being done. We're going to be coming into a pretty significant support zone where we've seen back in time here, this was resistance, and then it traded through it, and then it became more or less support and support and support. And so we're coming down with more or less a Fibonacci measured move down into this area. We could start to see the dollar bounce and ping pong, potentially form a bearish formation, and the dollar could continue to move down more and trigger a rally. But if we get a bounce in the dollar here soon, it'll put a little bit of a pullback in metals. Now, if you look at the weekly chart here, going back in time, we do have some this is a long-term pattern, and we could see this continue to trade sideways for a while, and nothing too significant yet. Once we start breaking this pivot low here, down around the 95 area, then we could really start to see things pick up speed to the downside and trigger a much larger rally, a breakout in the metals and miners. Now, taking a look over at gold and its trend, you can see the daily chart here on the right. It's picking up speed to the upside. We do have overhead resistance here. Let's go way back in time. Last week, a pretty strong week in the metals market. We really saw it pop and break. If we look over here at our trend analysis, we've gone from a downtrend to neutral to an uptrend, had a little bit of a pullback and pause, and then really took off. And we're up at this red hashtag. So the market is now trading at resistance, and it's got, not only is it trading up in all these resistance zones from in the past, let's just zoom in a little bit more here. We're trading up here, so we've got resistance. The market could very much so continue to spike and have some extra kind of blow off top, high volatility this week. I talked about that last week. We got out at resistance, but things could continue to have a lot of momentum and some wild swings. And with the market being up here at this overbought territory and pushing up into resistance, I think we're going to see some pretty good volatility in gold. When we've seen these levels hit in the past, you look at all these blue lines where we've seen massive sell-offs, and even if we zoom in more into this action here, you can see just these pullbacks. They don't look like much when you zoom out, but these are really significant pullbacks up at these resistance zones. And if we were to look over at the current chart, hard right edge, that is equivalent to us pulling all the way back down into this 1330 area or more. And we could see some pretty big volatility through here. We got one, two, there's another resistance level just above it here. So we could see the price trade in this big range here for a little while, and that's what we have to be aware of. Taking a look over at silver. Silver continued to start to break out there last week. It's gone from a downtrend back into an uptrend, and it's consolidating here on the daily chart. We'll see where price goes. It's trading relatively flat this morning, and it was trading up about 1%. It's starting to move down. If you look at the regular trading hours when most of the volume is traded, it does have a bearish formation at this point. We've had a drop. It's had a little bear flag, and we could see that continue to come down. The 5-day moving average will step up as support. It's also going to be through this area. There's a support area through here of these previous highs in the previous session high as well. So we might see a little bit of a pullback in the metals or miners this week. I think it's going to be pretty wild. I think we could still pop up to some new highs. It's going to get everyone all excited, worked up. But usually when everyone is excited and worked up as they are right now, we usually see the market chatter and then break down and crush a few dreams for a while until it takes off again. Taking a look over at miners, GDXJ pushing up. Again, it's in an uptrend. We got out right up here. This is near some resistance on the chart. There is a lot of momentum behind this, huge gap in price. Overall, it's getting a little bit overdone. It hit our target just as we expected. If we look at the GDX, which are the large caps, pretty much the same type of chart. And again, getting pretty lofty into these resistance zones. If you look at GDX, it's pushing up. It's got 1, 2, 3. Each one of these lines is a long-term resistance area on the chart, and we could get into some pretty big choppiness here. And we'll see. You never know. The market could blow right through it and take off, but we're still working through basing formations, breaking through some significant resistance areas. And whenever these levels have been tagged in the past, we've seen huge pullbacks. So we can always get back into the market, but you hate to give back gains. And just like what we're seeing in some other plays, once we do get a breakout, we can always still buy. We can buy potentially the breakout. You can buy the first pause or pullback of a new bull market or a new trend in general. If we take a look over at, let's take a look. We're at the natural gas chart here. Overall, it's in a downtrend, formed a bear flag on the daily chart here on the right, and then continued down for the second half of that move. If we were to throw a Fibonacci target in here, we could get an idea of the downside move. We go from here down to this low, up to this high, carry that forward, and we can see where that downside target is. There's potential here. We talked about natural gas trying to get down to this $2 area. We were expecting a bit more of a bounce drifting higher, a pause before it rolled over, but instead it's continuing to move down. And the downside, there's still some downside potential here down to the 210, 208 area, potentially a flush out panic sell-off low down to the 2. So this is a little mini bear flag. We got to move down. If we do an even smaller Fibonacci extension, we can go from this high down to this low and up to today's high, which is the 5-day moving average. Carry that forward. It shows us where the potential move could be. We got the drop, we got the bounce, and the second half of that move is down here, pretty much that $2 mark. Again, if your target is just below a whole number, 198, if it's just below 2, which is a whole number, you usually want to put your a target at 2 or a few cents above it. Sometimes it'll reach 201, 203, won't quite hit that whole number because a lot of people are gunning for these whole numbers. When they get to that level, they want to buy. So there's still some downside potential there for natural gas to have a real flush out low and then put in potentially a V-shaped strong recovery. That's a very low price for natural gas and could quickly get swooped up and see it get bought up as an oversold commodity. Crude oil had a really nice bounce on the chart. It has put in this double bottom formation as W. It broke the tip of the W. Usually the distance from the top to the bottom of the W is the breakout level. So you just measure that to the upside. It's had most of that move. We are getting into resistance right up here. We've got this consolidation over here. We got a consolidation over here. We also have the 50 and the 200-day moving average working themselves down. So we're getting into a lot of different resistance areas. It's had more or less this measured move, this distance. It's pretty much had that distance to the upside as well. So we're coming into a level where crude could find a little bit of resistance and have a bit of a pause. And if we take a look at the trend chart here, when you do get a trend change, you'll have the first pause or pullback can be bought or shorted depending on the trend. Obviously, the trend was up, and then we started to pull back. We got into orange bars where the trend more or less went neutral, and then it turned red. And this is the first pause or pullback with a new trend, and then you can hop on board and catch the move. Sometimes they're a little faster, but overall, if we were to look at the current price of crude, we've more or less we're still in a downtrend. This is it's rallied really quickly here, but we're on the verge of going orange. More or less, we could see crude trade here go orange. Could have a little bit of a pause or pullback, and then it could be an opportunity to get back in for the second half of the move up to 62, potentially 63 going forward, depending where those targets go. So we're on the verge of another reversal kicking in, and first pause or pullback in crude, we could get in for a rally up into the low mid 60s. Taking a look over at Bitcoin real quick. Bitcoin rocketing higher again today. It was setting up for such a beautiful short about a week or so ago. Let me go back to the daily chart here. That is not Bitcoin. Here we go. Bitcoin up 9.75%. It's forming this beautiful bear flag, this potential head and shoulders formation. We didn't get any confirmation of a reversal starting to the downside. It didn't break this low. It didn't break a neckline. Instead, it just gapped higher, consolidated, staying above this 5-day moving average, and really just popping again today. Obviously, the trend is up, and it has got a lot of power behind it, so it's just continuing to run higher. Really no play there. I don't really want to jump in and chase it. I was looking for the reversal. I'd rather play that to the downside. I thought it was going to roll over, but it didn't. Last but not least, let's take a quick look over at the chart of bonds. This is the daily chart. Again, consolidating, but still holding up in the upper end of this range, poking to some new highs last week. I feel as though bonds could continue to hold their ground and trade sideways for a while before they really start to take off. If we take a look at utilities, which are also seen as a safe haven play, we played the utilities move. We got in down at this blue line over here. We got out pretty much up on the day high, I think, over here. Since then, it's been chopping around and moving higher, but money continues to move into these safe haven plays. We're seeing more or less utilities channel its way higher, and money is moving into metals, miners, and utilities. But we'll see what the equities markets do this week. Are they going to put in a top? Is money going to flow into the safe havens and we see them take off, or is everything going to take a little bit of a breather? Last week, everything moved up, and there's no reason why, and everything's overbought now. There's no reason why everything can't have a pause or a pullback week in the market to kind of cleanse itself before things continue. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.